All right, welcome back. Now, this is a very interesting lesson, a prelude to something called as put-call ratio, which we are going to study later. But this lesson, I call it as small fish and big sharks. You see, in the ocean called a stock market, there are millions and millions of small fish like you and me. And there are a few sharks who feed on the small fish. Let us see how it all happens. Broadly in the stock market, if you are familiar with the stock market, which you should be, then there are broadly two activities. One is called as investment and the other is called as trading. Investment is for a long-term period. People who want to invest, they would do so for a long-term period and they would look at the true worth of the thing which they are purchasing. If you are wanting to invest in stocks, you would be looking at true worth of the stocks before you buy. But that is not the same with trading. Trading is for a short term period, and here you don't look at the true worth of the thing. You basically look at the price movement, whether the price is going to move up or down. All right. And if you are doing investment, then investment is normally done in shares, the stocks of the company. You actually buy the shares of the company, you become a stakeholder in that business. And if the business prospers, your money grows. All right, that is investment. But if you are trading, then trading is generally done in derivatives. You don't intend becoming a stakeholder in the business. You just want to take advantage of the price movement. So therefore, you trade in derivatives like the futures and options. You can trade in shares also. But as I have explained in one of my other courses about the basics of stock market, if you try to trade in shares, then you land up paying huge brokerage and taxes. Therefore, if you are a trader, if you want to do trading, then you normally do it in derivatives like the futures and options. Of course, the underlying asset still remains the shares of the company. And if you have come to learn technical analysis, then I presume that you are familiar with what futures and options are. You should have a clear conceptual knowledge of futures and options. Only then you will be able to understand the technical analysis. So broadly, when we come to the stock market, there are two categories of participants in the stock market. One are the small time retail investors and traders, people like you and me, whom I call as the small fish. And then there are big time institutional investors like the foreign institutional investors, domestic institutional investors, mutual funds, high net worth individuals, and many like them. These are the people I call them as big sharks. Okay. Now we are talking about technical analysis, and technical analysis is concerned with trading. If somebody were to invest, then he would do the fundamental analysis. All right. Since we are doing technical analysis, it is obvious trading is concerned with futures and options. All right. So we will talk about the traders who are trading in futures and options. On one hand, you have got the small time traders. These people trade in futures and options. And you have the big time investors. See, normally these big time investors do not trade. They don't do the trading. But they do indulge in buying and selling futures and options for the purpose of hedging their portfolio. Alright. Though in principle they are not doing trading, but still they are buying and selling futures and options for the purpose of hedging. Try and understand the difference between trading and hedging. Here, for these small time traders, the purpose of trading in options, at the moment I will talk about options only, forget the futures for the time being. So for these small time traders, the purpose of trading in options is to generate profit out of that. But for these big sharks, the purpose in trading in options is not to generate profit from the options. The main aim is to protect their portfolio. By indulging in options, they are only taking some safety measures. They are hedging. Their main aim is not to earn profit from this. Got the point? Keep it at the back of your mind because we will need this when we do the next lesson about put call ratio. A very important aspect. That is why I have put it in red. Okay. Now, as I said, on one hand, you have got the small traders and the big time players. So both the small fish and the big sharks both indulge in buying and selling options. One for the purpose of trading and the other for the purpose of hedging. Got it? But these small people like you and me, we can trade only with maybe a couple of thousands of dollars, not beyond that. But these big sharks, they have got millions and billions of dollars to pump in. Got it? So, who do you think is more wise? Among these two people, whom do you think is more wise? Probably the sharks. It is likely that some of the small traders may be more wise than the big sharks. But by and large, if you speak in general terms, I think the sharks are probably more wise than, people like you and me. And who do you think have got deep pockets? Obviously, we have discussed here, the big sharks have got the deep pockets. And who do you think can keep fighting till the end? Now you see, these big sharks have to survive on the small fish. So basically it is a fight. Okay. Who will survive till the end? Obviously the big sharks. And therefore, whom would you like to follow? Agreed that you are one among the small fish. But given a chance, if you are brought out of this ocean and you are given a chance as to whom would you follow, obviously you would like to follow the big sharks. Why? You would like to do the same thing what the big sharks are doing so that you can profit like them, you can generate money like them, isn't it? Now comes the interesting thing. You see, the small people like you and me, the small fish, we want to know what the big sharks are actually doing. Why we want to know that? We want to know that so that we also can do the same thing and profit like them. Very simple, isn't it? But at the same time, the big sharks also want to know what people like you and me are going to do. They don't want to know what we are doing. They want to know what we will be doing. All right? Mark these words. We want to know what the big sharks are actually doing. But the big sharks want to know what we will be doing, not what we are doing. Okay? Why? So that they can lay a trap for us. Got it? Try and understand this. Now, how do the big sharks come to know as to what people like you and me are going to do? How will they come to know? You see, if you are trading in the stock market, you are either looking at the candlestick patterns, or you are looking at the chart patterns, or you are looking at the technical indicators, or some other thing you are looking at, and then you are taking your trade. You are not just gambling. Some data you are following. Whatever you are looking at, the same data, the same charts, the same indicators are available to everyone on this planet, including the big sharks. So the big sharks actually know what you are going to do because they are also looking at the same data. Got the point? And that is how they lay the trap. Let me explain here with the help of this chart. Okay, we have seen this chart earlier. This is a chart of Tata Motors, a one-day chart on the National Stock Exchange in India. Alright, we have discussed this chart earlier. This is the resistance line, this is the support line, and people like you and me are trading within this range. Okay, when it comes here we sell, when it comes down here we buy, we do like that. But sometimes you see here this portion, when it comes out of the support line, when it goes below the support line, the small fish like you and me will think that it has broken out on the downside, and we will try and rush and sell out, thinking that it is now going to go down. Some are wise, some traders are wise, they would look at the volume. You see, I have told earlier that a breakout has to be supported by volume, but here there are no adequate volume. But still some, very keen, no voices, young people, they may get trapped. They will think that it is a breakout on the downside, they will sell out, and the sharks know exactly what they will do. So they will take appropriate measures with their hedging. They will reverse the move here. They started coming up. And within a short period here, within a couple of hours, thousands of small fish would have got swallowed by the big sharks. Got the point? Same here, this point. People like you and me will think the moment it goes out of this resistance line, we will think that it has broken out on the upside and we will start purchasing. Some smarter people will look at the volume also. Here see, the volume is also supporting the breakout. So chances are there more people will get trapped. Okay. But you see, some smart people like here also, they would have protected themselves and got away with small losses had they kept some stop loss or a counter trade, which we have all often discussed. All right, that's besides the point. So to protect yourself, you would have taken a counter trade or stop loss. But even then, millions or thousands of small fish would have got swallowed by the big sharks in this period. And the sharks have taken appropriate measures, they're hedging, and they have started the movement in the same direction which it was. So they are enjoying. But in this period, many small fish have lost their earnings. Got it? I am not saying that only such things happen in the stock market. No, not at all. There are occasions when the sharks will lay the trap for you. You have to be careful. But such things do happen, and therefore you have to be careful. Got the point? Now, in this lesson, we have seen that how the big sharks come to know how the small fish, people like you and me, are going to do, or what we are going to do. They come to know, and we have seen how they come to know that. In the next lesson, we shall to how you and me, the small fish, can come to know exactly what the big sharks are doing. Got the point? So in the next lesson, we shall try and understand something about the put call ratio, and that is how we will try to understand what the big sharks are actually doing. All right.